You're listening to Seattle Real Estate Podcast.
Hey everybody, I'm Sean Reynolds, the owner of Summit Properties Northwest, Reynolds and Klein Appraisal, and your host for this episode of the Seattle Real Estate Podcast. So the long-term outlook for housing prices across the U.S. is now negative, according to Zillow, Bank of America, and Corelogic. Long-term, they're all predicting a downturn. What does that look like? What are they predicting? That's what we're going to cover in this podcast. So let's jump right on into it. And I've got several articles here. The first one I've got is from the Dallas Morning News. So their headline was, Home Prices Outlook Across the U.S. Turns Negative. We all know that these headlines are used to grab your attention. They always grab mine. I'm like, I need to read that, because if house prices go down, man, I'm a real estate guy. I'm not going to make as much money. That's not good. So I better read this. So a lot of times these predictions are, you got to read between the lines and you got to figure out what they're actually saying. And I think that's especially true in this one. So home prices outlook across the U.S. turns negative. Zillow joins Corelogic in forecasts of declining house prices this year because of the pandemic. All right. We could have figured that one out, right? But what does it mean? Another forecast is calling for lower home prices across the nation. A survey of more than 100 real estate economists and professionals by Zillow and Pulsenomics LLC predicts a slight 0.3% year-over-year decline in home prices across the country. If you can get away with a 0.3% across the U.S., across the board decline in prices with a pandemic thrown in there, then I think you're doing pretty good. That's a pretty big win. If you saw a 10% drop, that would not be uncommon. If you didn't have crazy low interest rates and if you didn't have the limited supply in there that we do right now across the board in the United States, then I think you'd see a much bigger price drop. But 0.3% year-over-year decline in home prices around the country. It's the first such negative forecast by the analysts since the Great Recession of 2008. Early in the year, the economists had been predicting a 3.3% gain in nationwide home prices in 2020. Got to keep in mind, January and February, we were off to the races to probably have a record-breaking year as far as home prices go. And then the coronavirus hit in March, and sales just fell off the face of the earth. Just boom, done. Didn't have sales there for a while. And the sales that we did have put together, a lot of those we lost. I spent a couple of days, just day after day. It was probably 3 days. I think we consecutively lost more than one transaction. And a lot of that had to do with buyers backing out or lenders not wanting to lend. It was the early days of the coronavirus. And now that we've got protesters out in the street and we've got looters out in the street, I think a lot of people are looking at that going, hey, those guys are out there. Why shouldn't we be? Also, there's warm weather. People have been cooped up for too long. You got a lot of buyers out in the marketplace right now. So, and a lot of sellers who are like, hey, prices are up. Let's make this go. So a lot more activity now than we had obviously back then, but we're kind of working through all the data here, trying to figure out what do the data points mean. And for the most part, we're still probably too early to be making a lot of predictions, but what we're seeing here are kind of some big scale national type things that they're making predictions on. So this week, Corelogic changed its forecast to call for a 2% drop in home prices in North Texas and a 1.3% decline nationwide. All right, so 1.3% decline nationwide. Now that takes into consideration some areas of the country that are going to be particularly hard hit with second home or vacation places where there's still not much travel. I think you're going to see those drop significantly more. And then other places like here in Seattle, I think you're seeing home prices go up right now. That is my, when I point over here, that's where my laptop is. And that's where I'm doing all of my comp search for brokers, talking about appraisals with appraisers. And we're seeing either a slight incline or definitely some upward activity. And I think price increases across the board for most of our markets here in Seattle. All right, the predictions of home prices decreases come as a result of COVID-19. Yep. This is the first time since 2012 that the panel-wide price outlook has turned negative, and the quarter-to-quarter swing in expectations is the largest we've seen in more than a decade. This is from Pulsenomics founder Terry Loebs. He said in a report, longer term, the outlook for home values nationwide is mixed. Price projections for 2022 and beyond actually inched higher from levels recorded prior to the COVID-19 outbreak. So what we're experiencing here in Seattle, I think, is that euphoria of, oh, hey, we can go outside and look at a home. Let's get back into it. Or we really need a home this year, so we got to do it now. We can at least get out with our broker kind of one-on-one and take a look at homes. You're seeing kind of a release into the wild by a lot of people who have been cooped up for too long. Also, the good weather here in Seattle and in the rest of the country, you've got some hot weather out there, and people typically go out, they get out there after winter, and I think our spring market is being shifted into summer, and we'll have a really strong summer instead of spring, because that's just the dynamics of when you have your market shut down. All that sales activity gets pushed from March, April, and May into probably June, July, August. So it'll just be kind of this whole pushing of the marketplace. However, nearly 7 in 10 experts now indicate that their 5-year forecast has downside risk. Last quarter, fewer than 4 in 10 panelists foresaw downside, of course, but that was before the COVID-19 crisis, its economic devastation, and unprecedented government response. Even when home prices started rising again, the outlook is for scant gains in the years ahead. So I think what is happening is these economists are kind of banking on a lot of what I'm thinking as well. Right now, we've got these crazy low interest rates. We've got very little inventory, and you've got a lot of buyer demand. That will change as it changes over time. And right now, I think what the markets are seeing is this release of all these people out looking. They're getting out there. They're excited to look for a home. They're like, okay, we can feel a little more comfortable. If those protesters and looters are doing it, maybe we can go look at a home one-on-one with our real estate broker. I think that's a lot of what's going on. And so people are out there. But after this initial wave of buyers and sellers goes through the system, which we're experiencing right now, what does it look long-term? And that's what I think these economists are looking at. And that's also what I've kind of had in the back of my head is, hey, all these jobs that have been lost, those are not miraculously coming back around. All these small businesses that have been forced to shut down because they didn't have the financial reserves to make it through, or their business model just doesn't really work moving forward for whatever reason. Times have changed, more telecommuting, all kinds of stuff going on. So you've got those changes happening and small business shutting down. So all those people not working and businesses not shutting down, and all the jobs that the unemployed are going to try and go back to aren't there. That is going to have a significant impact on the economy. It just has to. And I think that's what a lot of the economists are kind of figuring into their models is that, all right, we know we've got this kind of surgence going on, and most of them aren't really even saying that. They're saying, hey, you know what? These numbers are looking fairly positive, but we're going to hedge our bets and say, long term, all this unemployment is going to have an impact on the economy. So we're going to kind of downgrade our growth to either holding steady or slight decline. That's what you're seeing. That's what these headlines are. And to project this far out, I mean, it's almost impossible to do. You can't really do it. But I find it interesting that these are what the big boys, as far as data collectors, are seeing as trends. Now, okay, so let's kind of keep on going. Again, even when home prices start rising again, which I think here in Seattle is now, the outlook is for scant gains in the years ahead. All right, based on what? I don't know. Yeah, Zillow's internal forecast, it foresees a 1.8% drop in U.S. home prices by October 2020. And that would be cumulative. Yeah, I could see that. But that doesn't seem to be the trend that we're on right now. Zillow researchers say nationwide home sales plunged by 44% in April. Those are the headlines people always grab onto. Zillow researchers say nationwide home sales plunged by 44% in April. That's because you had a nationwide lockdown. So, of course, you had sales just drop off. They got crushed. So the volume of sales got crushed, but the big difference there is house prices have not been crushed. And I'll tell you that day in and day out, looking at the appraisals that I'm looking at and the appraisals we're having ordered, the purchases coming through, and on the Summit side, the price levels that we are listing homes at and some of the escalation wars, the bidding wars that people are getting into to buy these homes, it's happening. It's ongoing, like every day. All right, so analysts are hoping that the home sales lost during the pandemic will be made up later this year and beyond. And I think that is true. I don't think we need to hope, especially here in Seattle. We're seeing it now. Experts forecast on the future of housing vary widely at this early stage of the recovery. Yeah, because we don't have enough data to really tell what's kind of going on. This is per Skylar Olson, Zillow's senior principal economist. Our forecast has become more optimistic as we ingest new data and watch pending sales pick up faster than expected. So yeah, pending sales are a real indicator of what's going on. So you've got the active listings being sold, and if you're pricing a property accurately in this marketplace here in Seattle, in the greater Pacific Northwest, it's selling quickly. I mean, really quickly. And a lot of times with multiple offers and people eliminating building inspections and all kinds of contingencies just to get the property. What does seem more consistent in this wisdom of crowds is that full recovery is a couple of years away, much faster than the last housing downturn, and remote work will eventually work its changes on the housing market. Remote work, I think that'll be a very small aspect of it. I think the unemployment factors, we need to figure out what that looks like. So we've had, 43 million Americans claim unemployment for the first time in the last couple of months. Is that maybe the last 8 weeks, I think? 43 million Americans have said, you know what? Need to jump on the unemployment bandwagon because I've lost my job, I've been furloughed, whatever. They don't have a job. And one of the things that a lot of people are talking about is that on the entry-level jobs, people are making more money on unemployment with the $600 weekly bonuses that run through, I believe, July. People are making more money than they were actually working. And so that's kind of de-incentivized. Is that a word? I think it is. Yeah, there's no incentive for people to go back to those kinds of jobs right now while they're making more money on unemployment. The real kicker there, and where the people who are working their way through this shutdown, is that when that unemployment and the bonuses end, then they are without a job. So you can only kind of get by with unemployment and pay your bills. Need that job afterwards to make it go because the bonuses are going to dry up. And at this point in time, I don't think you're going to see a second massive relief bill go through. I know it's been kicked around and I know a lot of people are talking about it, but I don't see that happening right now. There's too much focus on other stuff going on. All right, so here's another quick thing. Median prices for home sales in North Texas were 5% higher through the first 4 months of 2020. So that's January, February, March, April. So most of that data is from sales that happened in January, February, which were pre-COVID. So a lot of the numbers you're seeing, the upward numbers trending in the first quarter, are because the first 2 months of quarter one we were off to the races. Things were great. Things were not bad due to the coronavirus. So here's this is the Corelogic, kind of a summation of the COVID-19 impact on home prices. This is Corelogic's summary. The home price acceleration in the April home price index was supported by increased home sales in the first quarter of the year. Just talked about that. Home price growth is expected to decelerate somewhat in May, with the Corelogic Home Price Index forecast calling for a month-over-month increase of 0.3% compared with April 2020. So April, bad, May, getting better, bottom line. Looking ahead, the Corelogic HPI forecast, of the Home Price Index forecast, predicts an annual price decline of 1.3% from April 2020 to April 2021. And I think a lot of that's going to incorporate when we finally get a handle on the unemployment numbers, what does that look like? And less income, less housing. That's just the correlation there. Fewer people have jobs, fewer people are going to be able to buy homes. Could you have some overriding factors there? Yeah, but the unemployment's definitely going to put a damper on housing, because without a job, you can't afford a mortgage. In 2021, home prices are expected to decline for the first time in more than 9 years. I know people are predicting that, but as a reality, with our interest rates and our levels of inventory, with any kind of buyer demand, I don't think you're going to see a decline in prices. I think this stuff is people kind of looking at general overall data and going, you know what, I'm going to hedge my bet this way. But when it comes to housing right now, I think you're going to see a rise in prices across the board. So let's keep going, though, here to one more article, and this is from Business Insider, and its headline is, "More data shows that rising house prices won't last. The dip is coming." So there is the headline grabber. The dip is coming. What is going to cause the dip? How big is the dip going to be? How long will it be? Let's look at it. So national home prices saw a year-over-year increase of 5.4% in April. That's that big run from the beginning of quarter one. But Corelogic sees home prices falling on the back of a tough 12 to 18 months for the broader economy. And that has to do with all the small businesses shuttering and the unemployment factors. But tight supply and pent-up demand, particularly among millennials, provides optimism for a bounce back in the housing market purchase activity and home prices over the medium term. This is from Frank Northaft. He's Corelogic's chief economist. So tight supply and pent-up demand. That's, we've had demand pent up because we haven't had enough housing supply here for years. It's literally been since the Great Recession of 2008, builders have been not building enough homes, haven't been able to get enough homes on the ground to meet the demand. So we're in a constant state of undersupply. Let's move on. So the very low inventory of homes for sale, coupled with home buyers' spur of record low mortgage rates. Over the last few weeks, we've had just continuously low interest rates, so record after record kind of set for mortgage rates. Low interest rates will likely continue to support home price growth during the spring, meaning home prices will go up. If unemployment remains elevated in early 2021, then we can expect home prices to soften. That's a pretty safe bet. Our forecast has home prices down in 12 months across 41 states. So that is Corelogic's prediction? Yeah, that's from Frank North at Corelogic's prediction. So home prices down in 12 months across 41 states. Thanks so much. Have a good one. That was the mailman dropping off our mail. He doesn't wear a mask, by the way. Corelogic said home prices in April were up 1.4% month over month, and it expects a 3% increase from April to May. However, the report predicted the U.S. would see a yearly decline in the national home value as markets struggle to recover from the economic setback. For example, vacation spots like Cape Coral, Fort Myers, and North Port, Sarasota, Bradenton in Florida, those are groups of cities, and Prescott in Arizona are expected to see a decrease in home values over the next 12 months as vacationers stay home. That makes total sense to me, but those are pretty specific markets and they don't make up a ton of the housing stock across the United States, but they are really specific price points where I think you're going to see places impacted because there's no rental income coming out of those properties. All right. Bank of America has also predicted a drop in home values over the next year, B of A. In April, Bank of America said home prices would drop about 2% over the next year as a result of the coronavirus pandemic, and then they'd hit bottom in April 2021. So what everybody's saying is that we've kind of got a year to go here. I think everybody's hedging their bets as far as economists go. They're hedging their bets a year out to kind of see what the data is. And as these things change, which they will, I'll keep doing updates here to kind of let people know, hey, these are what the big boys are saying. And then I always take these reports, I read them, and then I provide my perspective of what I see going on. Because a lot of times this stuff, even if it's a couple of weeks old, and it's the headlines that you're reading as a consumer, it doesn't make sense with what I'm seeing going on, because I'm literally dealing with transactions being put together right now today. And that's what I base my opinions off of. And so a lot of times, especially on the appraisal end of things, we will see trends happen because we have to be able to support our appraisal values with data that's going on right now. And so we are forced to confront the fact when values drop, oh yeah, we need to check that declining box in our appraisal versus stable or increasing. The data is what it is. All right, so lower home prices, going back to Bank of America predicting home values will drop. Lower home prices will be a result of lower household incomes. Yep, no-brainer there. With the typical household income expected to drop 2% lower than pre-pandemic forecasts. I would think it would drop significantly more than that, but okay. Before the pandemic, Bank of America had estimated that home prices would increase 4 to 5% in 2020, but now it forecasts that home prices will drop about 2.3% before they hit a bottom in 2021. Going back to that April 2021, that seems to be what we're looking at. Pricing will be relatively protected because it doesn't see a high foreclosure risk and considers the market pretty well positioned with a lean inventory available. And the high foreclosure risk, a lot of people have hit me up and said, am I going to be able to buy a short sale here soon? Or can I get a foreclosed home from the bank? We're going to see that happen. And the answer to that is almost across the board, no. And the reason for that is because this economic shutdown, which is wildly different than the Great Recession, there's so many more things in place. Mortgage forbearance. If you're not going to be able to make your mortgage, you can call up your mortgage lender and say, I'd like a mortgage forbearance. They'll give you a handful of options. You can figure out what your best bet is, and you don't have to make a lump sum payment on these. At the beginning of the coronavirus, we saw lenders saying, in 3 months, you're going to have to make up not only those 3 months of payments, but also your 4th month. That's the only option we're giving you. That's not the case. I did a podcast and video on no lump sum required, something like that, if you want to check that out. So Fannie Mae and Freddie Mac have, and a bunch of the other lenders, secondary markets, have basically put people with mortgages in a position where they're not going to lose their home. So you're not going to see foreclosures. You're not going to see short sales. It's just not going to happen from this. Now, if people long-term can't get their employment squared away, if the unemployment picture is sour, then yeah, I think you're going to see problems. But for right now, immediately, no, you're not going to see short sales, and you're not going to see bank foreclosures. So according to a report by the Mortgage Bankers Association, applications to purchase a home rose 6% for the week ending May 15th. So just 2 weeks ago, big increase in mortgage applications compared with the week prior. In addition, Bank of America reported that a survey conducted by the University of Michigan showed an uptick in the percentage of respondents who believe now is a good time to buy. There's also been an increase in builder confidence. Well, the builder confidence one, it couldn't have gotten much worse. The builder confidence, I think it was in April, was at an all-time low in all the times that they had done that index and that survey. So to go from terrible to pretty bad, that's not hard to do. That just takes a little bit of an uptick. In line with this latter prediction on mortgage market position, Bank of America released a subsequent report in May pointing to early data on buyer and builder confidence and mortgage applications suggesting the housing market may have already hit bottom and was starting to recover. And that's what I think you are seeing is happening right now. We had this short downward trend of sales just basically stopped, and then you've got all that pent-up demand from that time period, that maybe 6 weeks of where people were truly locked down. I don't think people are locked down anymore. I think people are going out. I think they're going to the store more. I'm hearing more and more reports of, I had traffic going from here to there. I hit some traffic. It was really weird. And then you've got small business owners who are like, I can't wait for traffic to return to its horrible levels because that means people are out and about and my business might be viable again. So that's kind of what I am seeing. I am not seeing major downward trends on housing prices across the country. If our economic numbers, as far as our unemployment goes, if those things don't get squared away, and I don't see a real clear-cut way to recreate all these jobs that we've lost, that's going to have an impact. And I think that is it's at least going to put a damper on the real estate market. I don't think, and none of these predictions are big price drops. They're very, very small price drops. And so a lot of what's going on is the big activity we're having now will probably get dampened by some negative economic activity if that comes up. Stock market today we are June 5th. It is rallying, or it has been rallying, or was earlier. Things change so quick that I don't want to turn around and see what's going on. But stock market is, it's responding positively to some economic reports that things just aren't as bad as they see they are. And the stock market is not working in tandem. Its value isn't in tandem with where we are economic numbers wise. Stock market's basically kind of just blown off the coronavirus and moved on. It's not that far off of some of the highs that we saw pre-coronavirus. So it's basically just hasn't really recognized it much at all. And I know you heard a lot about companies that were struggling as all the governments put shutdowns in place, but really the only major big company that's had issues has been Hertz, and they had the car rental company, and they had issues before. I know you've heard things like Victoria's Secret not able to make rent, that Target is going to have issues because they're particularly targeted for the looting. But those are big companies held by big, typically multinational parent companies. I think they're going to be okay. And with the numbers you're seeing in the stock market, those don't jive with the big economic downturn. We're not seeing that. And I don't think housing prices across the U.S. are going to drop either. So that is my prediction for the rest of 2020. I think you see an increase in prices, maybe not a huge one. Maybe you'll see a little bit of a surge here as people go out and start to check out what's out there after being locked inside for so long. And then long term, I think you'll see an uptick in prices for 2020 and into 2021. That's too far away to kind of predict. So I don't know. Well, you'll have to check back into the Seattle Real Estate Podcast to find out. All right. So if this content is helping you or helping your business or helping your real estate business, love to have you subscribe on our YouTube platform and our podcast platforms. I'm doing a daily podcast, and I think we're going to keep doing that. So your support means a lot. We can't do this without all the viewers tuning in. So thank you so much. Love to have you comment. If you want to see content different sorts, if you have something that you're thinking about, hey, maybe Sean could cover that. Put that in the comments if you're watching this on YouTube. Reach out to us. We're happy to cover all kinds of topics. So that's it. Again, I'm Sean Reynolds from Summer Properties Northwest, Reynolds and Klein Appraisal. Thank you for tuning in to the Seattle Real Estate Podcast. We'll see you in the next one. All right. Thanks again. Bye. Don't forget to subscribe to our channel and hit the notification bell so you'll know when our next video is out.